absolutely flat. The Nifty holding on to 18,050.
The benchmark indices are up close to about 0.3%. Benchmark indices were currently up close to about 115 points in the Nifty.
Last 30 minutes and it's, so far so good. It's an up and up kind of a day. Market breadth, 1,200 stocks higher and about 1,000 odd stocks lower is the overall sort of stat in terms of advances today.
Hello and welcome to Markets Today, the show where we get you the 6 hours of the day's trading action in 5 headlines. I am Reema Tendulkar and these are the headlines for the day. Markets gained for the second day in a row with the Nifty and the sensex closing at 2-week highs. Market breadth favors advances, one stock advancing for every decline. ITC picks up with an initial 39% stake in Yoga Bar owner Sprout Life Foods for 175 crore rupees, plans to hike stake to 47.5% by 2025. The move will bolster the company's presence in the health-conscious food segment. Metal stocks shine as LME and Shanghai warehouse inventory shrink and CLSA turns upbeat on the SWIFT. China reopening, JSW and Vedanta gain 2% each. JSPL, Tata Steel rise 3% each. And in stocks making news, RVNL Siemens gain after a consortium of the two companies has declared the lowest bidder for different phases of Surat-Ahmedabad Metro Rail project. Delta Corp slips 4% after reporting a weak performance in the third quarter. Sources say HDFC Life applies to the insurance regulator for permission to enter into the health insurance space. That's an exclusive. Crude gains 2% to hit a one-month high after OPEC estimates that Chinese reopening will help global demand rise by 2.2% in 2023. However, continued supply of discounted Russian oil keeps prices in check. But before we get to all that, let's take a look at the market action today. The market clock gains for the second day in a row with the Nifty and the sensex closing in at 2-week highs. Prashant Nair is here with a wrap of the day's trading action.
Well, the market once again registering a triple-digit gain, over 100 points on the Nifty and looking good all across. We had the banks which also participated, unlike the banks which underperformed a little bit yesterday. The Bank Nifty actually got to an important level. It got to exactly the 20-day moving average, a short-term level closely watched, and then reversed from there, but good close. Nifty gains coming through in sectors like metals, so names like Hindalco, Tata Steel stood out. L&T did well yesterday, it did well today. UPL, Wipro, and the HDFC twins for a second day running doing pretty okay. Losses in names like Tata Motors, Ultratech, HDFC Life, which came under a little bit of selling pressure. There was follow-through in the broader market as well. Advanced decline was not wildly positive, some 1,200 stocks higher, 1,000 stocks lower. But Sula, for the third day running, is having a very good week. Just Dial was up sharply after yesterday's gains. BLS, TVS Electronics, Atul Auto, Mirza International, Landmark, Dhani Services were some of the stocks which actually did quite well. New age themes have been under pressure and that continued. Nykaa and Delivery both were lower in terms of what went down. ICS Lombard reacting pretty sharply to numbers which were not that big a miss. Bank of India for the second day running after numbers yesterday losing steam. Delta Corp earnings reaction on the downside. Radico and Minda Corp were some reversals. Minda was up 5 yesterday. It gave back pretty much all of it in trade today. The market is at an interesting juncture. It conquered the 20-day moving average yesterday. The Nifty, that is, the Bank Nifty is almost at the 20-day, touched that and then pulled back a little bit. The question is, can we add a couple of 100 points quickly from here if global markets remain supportive? They have been supporting. The Nasdaq has gone up for 7 straight sessions. The S&P was down only a little bit yesterday. I think provided global cues remain supportive, the dollar is well behaved, I think there may be a little bit more to go.
Thank you very much for that. In market opinion, Andrew Holland, Chief Executive Officer of Avendus Alternate Strategies, believes equity market is currently bottoming out, adds that he expects earnings growth to be in a range of 10 to 15%.
There's been a bottoming out process. We think that might continue. If I'm just, correcting what I'm saying, that the global economy, is not as bad as maybe we were expecting, then obviously, there might be thoughts around stagflation at some point over the next quarter. So I still think there's some downside to markets, in the shorter term. But I think once the Fed goes on hold, then I think the whole play on emerging markets and growth will continue to come through a lot stronger. If the markets fall 5–10% globally, then I think we'd be half of that. I think the resilience is still there. So unless there's any shocks in the budget, which we're not expecting, then we'll continue to grind higher over a longer period. And I think, you know, if I was to think of where Nifty might be in terms of from where we are today, if it follows in line with earnings growth, which we're expecting anywhere between 10 to 15% growth, then I think that's probably where we'll end up by the end of the year.
Moving on to some opinion on the global markets, Richard Harris, Chief Executive Officer at Port Shelter Investment Management, says Japan's yen has collapsed in the last 12 months and any irrational economic policies will impact economies. Listen in.
Japan has had almost a life cycle collapse in its currency over the past 12 months or so. So I think, yes, we are going to see a change of policy. We are going to see things come to fruition, I think, in terms of that. And it just fits in with what's happening in the rest of the world, which is that interest rates are going up. If you bring in economic policies that do seem irrational in the light of the environment, then you're going to get hurt for it. And I think that's what we really saw in Japan. Now, it does have some global implications. Well, rather than maybe increase interest rates, they are looking at putting liquidity into the market. You know, they obviously want banks that have reserves.
Let's get to the second headline now. FMCG major ITC has expanded its health food portfolio with the acquisition of a 39.4% stake in Yoga Bar for 175 crore rupees. ITC will raise its stake in the company to 47.5% by March 2025 and later completely acquire the company on the basis of a predefined valuation criteria. Manglam is standing by with the fine print on this deal. Manglam?
That's right. ITC was in focus in today's trading session. That's as the company has announced its intention to acquire 100% of Yoga Bar's owner Sprout Life in the next 3 to 4 years, but immediately they will go ahead and acquire almost 40% of the company at a valuation of for about 175 crores at a valuation a little over 445 odd crores. Importantly, you know, they will also infuse another 80 crores in the near future, and that will take their overall stake up to close to 47 odd %. And then, basis their internal valuation matrices and milestones, they will go ahead and acquire the overall 100% for the company. The reason why the stock ended mildly in the green is because it's a large market opportunity. 45,000 crores is the addressable market. Secondly, you know, Yoga Bar does have margins, gross margins of anywhere between 40 to 50%, which ITC can scale it up because they have about 68 crores in terms of FY22 revenues. The company said to us that they will do about 100 crores in FY23, and while they're EBITDA loss making, ex marketing spends, they are EBITDA positive making, and that's where ITC's scale as well as leverage benefits with regards to distribution will come in. I mean, case in point, Yoga Bar's current offline reach is 6,000 stores, whereas ITC's offline reach is over 4 million stores. So, you know, if they scale it up, that is something that the street will like, because, you know, if you just take a look at it from a trailing revenue basis, 6.5 times FY22 sales would make it an expensive acquisition as compared to the recent ones done, say Tata Consumer buying Soulful for about 4 times. But then again, scalability that ITC will provide will be extremely crucial to watch out for in this deal, and that is something that the street is hopeful for, and which is why the stock ended mildly in the green today.
With ITC's kind of support, we are going to get like a very, very large distribution. But along with that, we're also going to get logistics support, supply chain support, sourcing support, etc., to further improve your margins and things like that. Eventually, with you know, ITC support, we could take this brand global as well. And some of those aspirations for us is far larger than our own personal goals. It's how big can Yoga Bar be? And with an engine like ITC, we see that you know, anything is possible. We have 50% of our sale coming online, right? And in large platforms like the Amazons and Flipkarts of the world, we are the #1 selling breakfast brands. But from a perspective of being a 100 crore brand in 5,000 stores, you can sort of like imagine that 5,000 stores is actually a very, very small representative of the number of stores where Yoga Bar can actually sell. So from that perspective, the potential is very, very high.
Let's get to the third headline then. Metal stocks shine in trade as LME and Shanghai warehouse inventory shrink and CLSA turns upbeat on China reopening. JSW Steel, Vedanta gained 2% each. JSPL, Tata Steel rise 3%. Nigel is here with more on CLSA's view on the metal sector.
Well, that's right. CLSA has gone ahead and upgraded a whole host of metal stocks. Starting with Tata Steel, well, they've upgraded the stock and they've increased the target price all the way to around 130 rupees odd. For JSPL as well, the target price swings from around 430 rupees to around 610. And Hindalco is one of the top buys out there. They have a buy rating with the target price moving to around 580 odd. though they continue to maintain their sell rating on JSW Steel as well as have an underperform rating on Vedanta. Now, they have broken up three big reasons. One is on China. The reopening is gaining momentum, and also there is stimulus that's been injected into the system, which is good news. However, demand is yet to come up to steam. So that's something that we'll be watching out for, and that will be tracked post the Chinese New Year. So that's on the Chinese aspect. On the United States aspect, well, they're saying a recession is pretty much on the cards, but it could possibly be milder than earlier envisaged, which will be good news. And for India, the domestic demand remains very, very strong, which is positive. They also go on to state that now the Indian players, well, they're adding capacity, so exports become a crucial part as well. Put all this together, well, CLSA, they have upgraded a whole host of metal stocks. Back to you.
Thank you very much for that. Get into a break, but stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. You're still with us on Markets Today. Let's go over through the rest of the headlines that we're tracking for you. The fourth one is a CNBC-TV18 exclusive. HDFC Life has applied to the insurance regulator for permission to enter into the indemnity health insurance space. Sources say the insurer is likely to focus on critical illness products post the IRDAI approval. Yash joins in for more on that. Yash, what are you picking up?
Well, Reema, this is nothing but the second largest life insurance company planning to enter in a market which is worth about 75,000 crore rupees. What we've been given to understand from our sources is that HDFC Life has applied to the insurance regulator IRDAI, and this is to seek the regulator's permission to enter the indemnity health insurance market. Do remember that currently life insurance companies are only allowed to sell fixed benefit health insurance products, which is a negligible amount of the portfolio. The larger amount is indemnity health, the business which health insurance companies and general insurance companies do, and that's the permission which HDFC Life is seeking from the regulator to enter. If you remember, just a couple of months back, the government has floated a consultation paper seeking to amend the Insurance Act, under which life insurance companies will be allowed into general insurance space and vice versa. Now, this approval for HDFC Life from the insurance regulator depends on whether the Parliament session this time around in the budget session approves those amendments in the Insurance Act. That is one thing. The second positive for HDFC Life Insurance is that they've also asked the insurance regulator to be allowed to distribute various other financial products, be it bank deposits, loans, mutual funds, other insurance products. So that also opens up a new business stream, a revenue stream for HDFC Life Insurance. Of course, that particular proposal also depends on whether the Parliament in the budget session approves the amendments to the Insurance Act, and then the regulator, if the approval comes in the Parliament session, then the insurance regulator will have to take HDFC Life's approval for its consideration.
Thank you very much for that. Moving on to individual stocks which were in the news. Gaming and hospitality major Delta Corp was down 3% after it posted a muted set of Q3 numbers. Hardik Debar of Delta Corp told CNBC-TV18 that online gaming has been historically profitable for the company and it's made a cash profit of 1,100 crore rupees. Listen in.
The online gaming business historically has been a profitable business. A couple of quarters before we start seeing the results of these investments, and I believe that in the next maybe a couple of quarters, maybe 3-4 quarters, we should see kind of a steady state, inching back towards the growth and profitability trajectory. That this is the first time ever in the history of Delta we've made a cash profit of over 100 crores.
Let's move on to the other notable earnings. ICS Lombard was down 4% after the net profit for the third quarter failed to meet street expectation. Surbhi's here with the fine print.
The company has delivered a healthy 17% premium growth led by health and life fire insurance. The PAT growth came in at 11%, slightly lower than estimates due to lower investment income, and that's what the street is concerned about the most. The combined ratio was broadly stable at 104%. The ROE came in at 14.3%, similar to what it was same time last year. The management has guided for continued investments in the retail business and lower combined ratio in FY24 and improvement in ROE into high teens going forward. Most brokerages have cut their PAT estimates but still retain a buy rating on the stock. Morgan Stanley has an overweight rating with a target price of 14.95. Jefferies and Motilal Oswal both have a buy rating with a target price of 16.20 and 1,500 rupees per share. Kotak has a reduced rating with 12.25 as their target price.
Okay, thank you very much for that, Surbhi. RVNL and Siemens gain after the consortium of the two companies was declared the lowest bidder for different phases of the Surat-Ahmedabad Metro Rail project. Vivek is here with more on the deal.
A consortium of RVNL and Siemens has emerged as the lowest bidder as far as two rail metro tendering projects are concerned. One of them is the Ahmedabad Metro Rail project. This is for the phase 2, worth almost 384 crore, and the other one is for the Surat Metro Rail project, where the value of this particular order is over 670 crore. Now, this particular consortium, is in the ratio of 65 is to 35 in favor of Siemens. And when you're talking about, how exactly this particular order win boosts the order book of Siemens. Now, remember, even day before yesterday, Siemens had indicated to the exchanges that they had won a significantly large order win as far as locomotive engines were concerned. So rail activity as well as railway infra tendering activity is something that's aiding especially Siemens. Now, Macquarie has written a note on this particular development. They maintain an outperform rating. They're saying that the strong ordering momentum continues as far as Siemens is concerned. This particular order for the rail metros implies an order inflow worth almost 688 crore with an execution timeline of 19 months. And they believe that the locomotive is going to be the key driver as far as Siemens order book is concerned going forward.
Thank you for that. Landmark Cars was another stock that was on our radar, up 5% after the company reported a 41% growth in revenues in its 9-month FY23 business update. Sonia is here with the details.
Landmark Cars, which is in the business of its premium luxury auto dealers. Now it's one of the largest dealerships in the country, and the numbers are looking very good. They've given an update for the 9 months of this fiscal, and the total growth, the revenue growth that they've seen is very strong, in excess of 41%. They say that there are multiple tailwinds in the business. One, income levels have gone up. Second, there is a rising preference for luxury cars. There are new model launches by the OEMs, and the preference is now leaning towards luxury automobile ownership, as I mentioned. The total revenues from operations are up 41% year-on-year at 3,384 crores. Vehicle sales have gone up by 44%, while after-sales service and spare parts are up by almost 30% or so. The company has also opened 3 new outlets of the Baidi brand in Delhi NCR as well as in Mumbai, and 2 new outlets of the Jeep brand. And they've also given an update on what they did with the IPO proceeds. 138 crores of the IPO proceeds have been used to repay their working capital loan. So positive business update coming through.
Thank you for that. And finally, the fifth headline for the day. Crude prices gained 2%. It hit a 1-month high after OPEC estimated that Chinese reopening will help global demand rise by 2.2% in 2023. But on the other side, continued supply of discounted Russian oil has kept prices in check. Manisha is here with more on this story. Manisha.
Well, we are trading at a 2-month highs nearly for the crude oil prices. Good gains continuing, so much so that we have turned positive now for 2023 till time. Well, the triggers comes in from OPEC, which says that last year global growth was at 2.5 million barrels per day, and this year it could be a build-up on that by 2.2 million barrels per day of a global demand growth. And then you have China, which says that 4% of an increase in import of crude is what they have registered for the month of December. And when it comes to the crude product exports, that gained up by 25% on a month-on-month basis as well. And then the markets also are looking at the dollar index still trading below 102. Markets do believe that as we move forward, there is more demand growth that can be anticipated, not just from traffic, but from aviation and furnace demand as well. And then heating oil demand now seems to be surging up in case of the Western countries. US and UK have finally seen winter hitting them, and that demand seems to be moving up as well. Markets does believe that from here on, you could be looking at $85 to $100 per barrel of a range continuing for the crude oil prices for rest of this quarter.
Manisha, thank you very much for that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.
Presented by Tested